that the dollar will ultimately collapse under the weight of that debt. The new jobs that have been created on balance went to foreign-born workers. Some of them were probably here legally on visas, and a lot of them are probably here illegally. The only ones that really seem to be buying now are the foreign central banks. And that really tells you something important. And they recognize that the dollar's days are numbered, that massive inflation is coming. Well, war is a risk. I mean, and we have war now. The risk is that it spreads. And,
Yeah.
that's a big risk too. Not only is it a financial risk, but, it's human. I mean, people die in wars. But yeah, we're a financial house of cards, so we can collapse at any minute. I mean, banks could fail. We could have runaway or hyperinflation. We're living on the cusp. I mean, people don't realize how close to the edge, we're skating.
Yeah.
And the fact that inevitably we're going off. It's not a question of if, it's just a question of when. It's Putin. Putin did it.
Okay, ladies and gentlemen, welcome back to another fantastic interview. Today we got Peter Schiff, who is the founder and chairman of Euro Pacific Asset Manager. It's been about 3 years, almost to the day actually, when we last spoke to Peter. We had quite a interesting conversation and somewhat of a battle over a couple of points. So you can see that interview. It is on the channel. You can do a quick search, Peter Schiff, on the channel. So welcome to the show, Peter. Good to have you back.
Oh, thanks for having me back on, Neil.
Yeah,
Nice to see
yeah,
you again.
yeah, you too. So I want to start. I've got a lot of questions for you today. I want to start with asking you to talk about your view on the current state of the global as opposed to local economy. And then, as a kind of follow up to that, please, how do you see that changing as we move forward with the onset of all of the geopolitical issues? So, there's your first question.
Well, I think there's a tremendous number of problems in the global economy. I think the origin of which has to do with the U.S. itself and the U.S. dollar status as the reserve currency and the big buildup in imbalances that have resulted where the world runs huge trade surpluses and collects dollars and invests them in U.S. treasuries and other assets. I think this whole thing is starting to implode. Over the last 10, 12 years, the central banks have created, a lot of inflation. I think the U.S. was the primary instigator of the inflation, but the rest of the world followed suit. And we're just starting to experience a lot of the adverse effects of that inflation in consumer prices, which are now just beginning their rise, and they have a long way to go up around the world. And this is a game changer for central banks that have been able to justify keeping interest rates very low, or in some cases negative, because they were able to hide behind the pretense that inflation was too low and that it was okay to try to raise the rate. Now, very few people around the world believe inflation is too low. So it's going to get a lot higher. It's a big problem everywhere. But also, I think the world is trying to divest itself, certain countries, the BRIC countries, of the U.S. dollar and move beyond the dollar-denominated system towards something else. And so that's going to be very disruptive, particularly in the United States, but it's going to have ramifications around the world as exchange rates are realigned and countries, have to absorb these changes. Countries that have been exporting to the United States are going to have to do something else. They're going to have to export to other countries or consume themselves, which may entail a change in the composition of what's being produced, because the local demands may be different than what the demands were in the U.S. But resources in the exporting countries are going to be, retooled, re-outfitted to satisfy domestic demands rather than used for satisfying the demands of Americans. So it has major implications for exchange rates and trade and interest rates, inflation rates. But I think all this is on the horizon. But very few people are prepared for it. I think the conventional wisdom about where we are is completely wrong. Most people think that the Fed succeeded in putting the inflation genie back in the bottle, that we're going back down to 2%. The Fed's going to be able to cut rates. In fact, all that people want to bet on is, when are we going to get the first rate cut? How many rate cuts do we get this year? How many do we get next year? When does the Fed go back to QE? And everything is great. But what's going to happen to rain on the parade is inflation is going to resurrect. It's not dead and buried. It's going to come back bigger than ever. So it's not about when the Fed cuts, but when they start hiking again. And the fact that the hikes are still not enough. What the Fed has already done is not nearly sufficient to solve the problem. In fact, all you have to do is look at the record amounts of debt, government debt, consumer debt. The borrowing and spending binge has not stopped at all due to the Fed's rate hikes. So that shows you that the rate hikes have been too little to be effective. We need much bigger rate hikes. The problem is we can't afford them because we're too broke and we have too much debt. So inflation is here to stay. It's going to get worse. And when the markets come to terms with this, it means a much weaker dollar, much higher gold price, higher long-term interest rates, lower asset prices, stock prices. Although some stock prices will go up, but certain other ones will come down.
Yeah, just a point. Oh, actually, I had about 5 questions from that as you were going, but you mentioned when let's call it sort of the lockdown periods, 2020, 21, etc., when the Fed did create trillions, and it's something like I can't remember off the top of my head, it was something like $8 trillion in new debt that was issued. What would have happened to those other countries if they didn't follow suit and they didn't create all this extra, this new capital, as it were, as well?
Well, their currencies would have gone up,
Mm.
and they wouldn't have as big an inflation problem as they do now. And, they are complicit. We led them down this primrose path, but they followed it. They followed us.
Now, do you think that was just those central bankers saying, "Oh well, look at the Fed, look at Powell, look at Yellen. They know what they're doing, so we'll follow them"? Or do you think there was something that happened behind the scenes there? Maybe there was a closed door meeting that they just said, "Look."
Although, I don't know if it was necessarily that they were following Powell. I mean, they may have come to the same conclusions on their own, the same policy choices, because they're all political and they're trying to deal with this problem. And rather than deal with it, they want to print money.
Yeah. Yeah.
Now, I mean, they all made a mistake in the way they dealt with COVID. I mean, that was also a mistake. There was no reason to lock down the economies the way they did.
Yeah.
There was no reason to quarantine everybody and isolate them at home and keep them out of the workplace or out of the schools. But it was another even bigger mistake. Once you've decided to do that, you need to come clean with the public about the cost. Hey, we're going to close down the economy. That means you have to stop buying stuff. You have to stop spending. You're not going to have your incomes anymore. You may lose your jobs. This is not going to be easy. But these are the difficult sacrifices we all have to make to fight this disease, this menace.
Right.
But the politicians didn't say that. They said, hey, it's not going to cost you anything. You can stay at home and not go to work. We're just going to send you a bunch of money to replace your paychecks that you lost.
Yeah.
And in fact, in America, we were so dumb in America, we gave people more money not to work than they used to earn when they had their jobs.
Yeah.
So people earned more money staying at home, except they didn't earn it. They received it. They didn't produce anything to get that money. The Fed just created it out of thin air, which is why prices are so much higher now.
Yeah. Yeah. I agree with what you said, Peter. I know it's funny when people say that's a very controversial point, or, things like that, but it's true. There was no need to destroy all the small businesses. There was no need to cripple the economy. There was no productivity. And as you say, they just instead created all this new currency and flooded the market. And then they're surprised when everything goes up in price. It just,
they just want to, well, it's Putin. Putin did it. Or it's these greedy companies. These companies are just gouging the consumers all of a sudden. They're jacking up prices because they're mean.
Yeah. Yeah, well, but the average person does believe that what they see on, CNN, CNBC, the BBC in the UK. So uh, I can understand and relate to you, but we're a very small minority of people saying these sort of things. Now,
Yeah.
the last time you came on, I want to get this point out the way, and then everything else is positive. But we disagreed on one point over interest rates. Now, I said that we could probably handle up to, I think I said 6% interest rates, something like that. And I remember you said if we get rates to 5%, the dollar would just implode. Why didn't it implode? What do you think happened that they were able to sort of manage that 5% without
Well,
causing a massive issue?
a couple of things happened. First of all, the banks started to fail. We would have had a financial crisis a year ago if the Fed didn't bail out the banks.
Yeah.
And so that bought us some time. But also, what's helped prop up the dollar is the belief that the rate hikes are over and that these 4 or 5% interest rates are in the past now and that we're headed back down. So I think that the belief that interest rates are not going to stay here, that they're going down,
Mm,
is also what's helping to prop it up. But that's wrong. Rates are going to go up, and the markets are going to have to come to terms with the reality that rates are not only higher for longer, but they're going even higher than they were. And it's not just longer, it's indefinitely. But I do
interesting.
think that the dollar will ultimately collapse under the weight of that debt
Yeah.
because, you know, the Fed is not going to be able to allow long-term bond yields to move back above 5%. I mean, now they're in the fours, but we get back above 5, we go to 6%. I mean, the math doesn't even work here.
Yeah.
But I think the Fed is going to be under enormous political pressure to print more money to stop yields from rising. They're not going to raise rates because that's going to cripple the government even more because every time they raise rates, they increase the burden of financing the debt. I mean,
Mm,
all the bonds that are being sold now by the government to fund our, 2, 3 trillion, $4 trillion a year deficit, it's all short-term money. All
mm.
this stuff has to be rolled over every 90 days. And
Yeah.
so
Yeah.
if the Fed raises rates in the short run, that destroys the government. It makes the deficits even bigger because we have to borrow more money to pay the interest on the debt, which increases the budget deficits and then increases the debt. So it's a just self-perpetuating spiral. And ultimately, the Fed's going to be the buyer there, and that's going to crush the dollar. And as the dollar gets killed, inflation gets worse, and that makes the problem worse. So now we have more debt that we can't sell, and more money that the Fed has to print, and an even bigger inflation problem, and it's just an endless loop of destruction.
Yeah. Now, when Powell decided to actually try and, well, by raising rates, I remember that his ideas at the time. There's basically two main things he was trying to do. He was trying to slow down the economy, slow down demand, and slow down purchasing and spending. But he was also trying to increase unemployment as a way to kind of do that, fall hand in hand. It didn't really work. Now, I mean, if you look at the debt and you look at the debt levels now, I mean, credit card debt alone is over $1 trillion for personal credit card. The debt's gone crazy. What do you see that happened there that didn't work for his
Yeah.
strategy?
I mean, look, that's based on a false Keynesian belief that inflation is a byproduct of economic growth or employment, and that the way to reduce inflation is to slow down economic growth and throw people out of work.
Mm,
That's not true. In fact, it's actually the opposite. If you think about it, it's a strong economy where people are employed productively. That is what keeps prices down because that increases the supply. You're producing more. And so what you produce will cost less because you have more supply.
yeah.
So we didn't need to slow the economy. What needed to be slowed was spending, not the economy. We didn't need to throw people out of work. We just need people to keep working, but not spend everything they earned. They needed to save more money. So we needed more savings in the economy that could finance capital investment that would lead to greater productivity and output. And we needed less consumption, less spending. So that would reduce demand and increase supply. But we didn't get that. We actually decreased supply, and demand continued. Even though the Fed raised rates, it didn't raise them enough to slow down the spending.
Yeah.
And even though the people lost jobs, well, they got 2 or 3 jobs, part-time jobs to replace them, but then they replaced their lost income with debt. Credit card debt is exploded to record highs. Even though interest on credit card debt is also an all-time record high, it hasn't slowed borrowing. And we know the US government has not responded to higher interest rates by cutting spending. They're borrowing even more. They're just borrowing the extra money to pay the higher rates. And so what that tells you is the Fed has just not raised interest rates nearly enough to restrain the spending. But you don't want to put people out of work. That just makes it worse. You know, we need people working. We need them producing. What we don't need them doing is spending. They have to slow down the spending. But we've got this bubble economy that's 70% consumer spending.
It is.
So the only way we can really address the inflation problem is to have a recession, because we need less spending. But
well, the problem
they don't want to let that happen.
Yeah, the problem with that is, didn't you have a recession in the US and they just kind of said, yeah, I know it was 2 negative quarters of GDP, but we're not going to call it a recession this time around. You know, I don't even know if they're right on a lot of the figures. I really don't believe it. When I look at those figures and then they revise those figures, so it's always growth, and, you know, Biden brought back the most jobs in history. Well, sorry, Biden created the most jobs. No, he brought back jobs that were already,
well, he didn't even bring them back. He had nothing to do with them coming back.
Yeah.
Basically, Biden says, well, more jobs were destroyed under Trump than under any president. Well, yeah, because we decided to shut down the economy when Trump was the president. And when Biden stepped into office, we reopened the economy and we told all those people who left their jobs, you can go back to work now. That's all that happened. So he didn't create any jobs. The jobs that already existed before he was president were just reoccupied by the people who had them.
Yeah.
But I mean, it's all disingenuous at best. They're just outright lies. But I don't believe any of these government statistics. I don't believe the economy is even growing by GDP. I think the GDP is wrong. I think they're understating inflation, so they're overstating growth. I think a lot of the numbers are made up. I don't believe the unemployment rate. I don't believe the job creation. And the way you kind of know all this stuff is a bunch of BS. Look at the record low unpopularity of President Biden. It's not because he's old and he forgets things. Popularity is always a function of the economy. The American electorate tends to give the incumbent president credit when the economy is good and blame when it's bad. And the fact that nobody likes Biden, or so many people don't like Biden, it's all because the economy is bad. So how can these numbers be accurate if the economy is so bad that Biden's popularity is so low? And in fact, his lowest numbers, where he polls the worst, is on the economy. so that tells you right. That tells you right there.
Yeah. I was reading a report, I think it was last week, which I'm not sure if you follow a lot of the government.
And one more point. And it's not, the media is constantly telling the public how great everything is.
Yeah.
Yet despite this, Biden scores so low on the economy. So imagine if the media was telling the truth about the economy, where Biden's popularity would be.
Yeah. Well, a lot of people, my subscribers, don't believe anything the media says these days anyway. So there we go. I was just about to say about this report I was reading, and it was this new theory. I don't know if it was from the Treasury or it was from someone. I don't think it was from the Fed, but there's this new theory that they're playing with, economists, and it's called it's something like budget deficit GDP growth. It's some really long name. And their theory is that they're creating all this deficit spending. So they're creating all this government debt. And what they do is they double account for it into the GDP numbers. And they're saying that now this is this new strategy they're going to look at because they're seeing this huge GDP. Like when we saw those GDP numbers a while back, I said, how is that possible that the US is the only country out there? They all follow the same models, and yet GDP is huge. Well, there's this new theory now, and there was this new paper on it, and they're looking at this for the future. And I thought, okay, I got to ask Peter this because I know what you're going to say. To me, this is crazy. So they're creating debt, double accounting for it as GDP, and they're saying that the US is growing stronger than any other Western nation. What's your thoughts on that?
Well, look, I know that when you look at our GDP growth, it's less than our debt growth. So the debt is growing faster than the economy. So how could you look at the economy and forget about the debt? Because the economy is not really bigger if all we've done is borrow money and spent it.
Mm-hmm.
And how do we repay this debt? Plus, the debt carries interest. So if you borrow money and spend it today, that means you have to reduce spending by even less in the future to pay off the money you borrowed plus the interest.
Yeah.
So it's not real legitimate economic growth.
Yeah.
It's just a gigantic credit bubble. And it's fueled by the Fed. The Fed is enabling it by creating inflation. And even though, it's doing quantitative tightening now, the amount of money it's withdrawing from circulation is tiny compared to all the money it put in.
Yeah.
And I think before the end of the year, they're going to end quantitative tightening and they're going to go back to quantitative easing, probably before the election. And one of the impetus for returning to QE is going to be to try to help Biden win the election because the economy is going to be getting worse. So they're going to try to pump it up. And how are they going to do that? Well, just print money. That's all they got.
Yeah, I mean, I think it's $95 billion dollars a month in QT, which is just for the viewers, that's quantitative tightening. It's the destruction of what you would see as money, even though it's not money. But that's what we're seeing, 95 billion. And the only time that really jumped up with the QE recently was when Peter mentioned it was the bank failures, SVB, Silicon, Signature.
Yeah, they added 300 billion that 1 week.
Yeah. And that's what made that sort of on the Fed assets, it sort of went crazy again. And then we've been dropping down. But the tapering isn't significant. I mean, it might sound like a lot to people listening, almost 100 billion a month, but it's not really a huge amount. And I would agree with you, Peter. I think we're probably going to see that QE later on because what's their option? It's either they move the QE or they start changing rates. So I was reading about the what they're factoring in at the moment. So the markets basically believes that we're going to see a 1.5% or 150 basis point reduction in interest rates by the end of this year. What do you think about that forecast?
Well, look, it's possible, but it's not going to be because inflation is back down to 2%. We're not even getting anywhere near there. In fact, inflation will be higher when they cut rates than it is now if they cut rates. The question is, will they be able to cut rates in the face of rising inflation? Now, maybe they will. Maybe they'll claim it's transitory, although they probably won't use that word again. Didn't work out too well for them last time. But they'd have some excuse for why it's only temporary. But I think that we're also going to get the quantitative easing. I think it's not just about the Fed cutting rates, because I do think that the economy is going to weaken at the way the government keeps track of it. We may end up with some revisions so that we find out that the numbers we got in the past were not really as high as we were told. And we could start to see an increase in the official unemployment rate, which will be problematic. And so if we're going into an election and unemployment is rising, the Fed may, inflation be damned, and we're going to cut rates anyway. So it's going to be interesting, but the rates are not going to go down in the environment that people think. And it's possible that we don't get the cuts. We could even get a hike. But
Mm, yeah,
I doubt the Fed would raise rates. But I think that what could happen is they just don't cut rates.
yeah.
But if inflation is getting worse and the Fed stays the same, then rates have gone down. Real rates have gone down, and so that has some implications for markets as well,
Yeah.
particularly the gold market and the dollar.
Yeah. Now, a lot of people have been asking me about the UK Eurozone and when these rate cuts are coming in, because everyone's expecting 1 to 1.5% at the end of the year. I mean, I don't know how much you follow these markets, but I think people might get a shock with the UK, the Bank of England, and the ECB. I'm not convinced that the economy can really handle these rate cuts that so many people think are coming. Do you follow that at all?
Yeah, look, people don't realize that the low interest rate environment that we were operating in, post the '08 financial crisis, that is not normal. That was an aberration, and that is the source of a lot of the problems we have today, especially the high inflation.
Mm,
And we really shouldn't be looking for a return to those bad policies. Rates need to normalize. They need to reflect true supply and demand in the economy of savings and borrowing and the fiscal position of governments. Rates globally need to be higher than they are right now. They're still too low. That's what the markets don't get. Rates need to be higher, not lower. And
mm,
I think the normal that we need to go back to is what we had before the financial crisis, not after the financial crisis. And there are a lot of people that think, well, we need low interest rates now because we have so much debt. Well, we may need them, but we ain't going to get it. Just because you're broke doesn't mean you're going to get lower interest rates. In fact, it's normally the reverse. The worse position you're in financially, the higher your interest rates. The banks don't want to give you a break because you got so much debt, right? If you go to a bank and you're broke, they're not going to say, well, considering how broke you are, we're going to give you a loan and charge you really low interest because that's all you can afford. It's like, well, you're really broke, so we got to charge you a lot more, because you may not pay us back. So we're going to get higher interest rates. The fact that we can't afford it isn't a get out of jail free card. It just means that they're going to be that much more painful when we have to deal with them.
mm. I was going to ask you something else, but as you were talking, I wanted to, because I've heard you once before on one of your videos. I got to say, I don't watch every one of your videos, Peter, maybe once a month, but it's always great when I do watch it. You were talking about jobs a while back, and it was really interesting what you were saying about the jobs numbers. And I wanted to ask you about that. If you could talk a little bit about jobs today, what are you seeing in the US particularly? And also, I want you to link that with AI, so artificial intelligence. Are you seeing in the US AI taking a lot of jobs at this stage? Do you think it's going to take a lot of jobs?
Um, well, first of all, so a lot of jobs have been lost. A lot of full-time jobs have been lost over the last several years. In fact, over the course of the Biden administration, 100% of the jobs that were created were part-time net. We've actually lost full-time jobs under the Biden presidency. So what we have is a lot of part-time jobs, and a lot of these jobs will probably eventually be replaced by automation, AI, robotics, whatever. But for now, we have a lot of these low-paying service sector jobs, part-time jobs. I think most of the jobs that were created went to people who were already employed. So it wasn't people who were unemployed got their first jobs. It's somebody who was already employed who got a second or a third job. You have a record amount of moonlighting now in the United States. And that's a response to a big increase in the cost of living. I mean, everything is 30 to 40% more expensive than it was when Biden took office. So how are people paying for all these bills? Where are they getting the money for food? How are they paying their rent? How are they paying for insurance, health care, all the things? Well, they got a second job. They got a third job. That's where the money's coming from. The other sources, they're going into debt, right? They're borrowing the money.
Mm,
So all this is unhealthy. And it's a negative sign. Eventually, we're going to start seeing more losses. In fact, another statistic is that all the new jobs that have been created, on balance, went to foreign-born workers. So these are people, the new jobs were people who came into the country. Some of them were probably here legally on visas, and a lot of them are probably here illegally, taking some of those low-paying part-time jobs. So I mean, this really is, a weak labor market, a weak job market. As much as Powell and everybody wants to talk about the strong labor market, we don't have a strong labor market. We have a lot of people working who would rather not work so hard, but because the labor market is so weak, a lot of people can't cut it on one job because the pay is not high enough. They need two
Yeah.
or three. If we really had a strong labor market, one job would be enough, you know?
Yeah. I was talking with Jim Rogers just before I left Thailand, and I posted the interview on the channel. The viewers will have watched that. And we were talking about jobs quite a lot. And it's interesting being over in Asia and looking at how the job market is there compared to here in the West. It's really, really fascinating, even to the point where I don't know if you know about the robotics and how far ahead they are, but I'll give you two examples of things that really surprised me. I'm walking through the airport in Suvarnabhumi Airport in Bangkok, and this robot sweeper comes by and it's sweeping, it's got this mop thing, it's cleaning. And I thought, wow, that's replaced the job of one or even two people, because you got one aspect of it sweeping, the other aspect is it's cleaning. So that was one thing I saw. And then I was in a restaurant, and it wasn't a human that took my order, it was a robot that took my order. It was the craziest thing. And then when the food came out, again, it was a robot that brought the food. It was really strange. And when I'd finished, again, I pressed the button, the robot came, I put it on its tray thing, and it took it into the kitchen to be washed. I mean, we're seeing this insane speed, and this is just the robotics, the physical, what we see in the real world. But we've also have the AI taking a lot of white collar jobs. No doubt it will take some blue collar jobs in the future as well. Do you have any concerns about this? Do you think it's going to impact the economy quite hard? I mean, I'd love your views on it.
Well, over time, that is definitely the trend. It will be for automation, a combination of AI and robotics will eliminate a lot of human labor. And it's basically, it's these inventions are liberating humans from having to do these tasks. It's freeing up our time to do something else. And a lot of that something else may be more leisure, which is something that everybody aspires to.
Mm,
But all the inventions since the dawn of time, anytime somebody has invented something, it reduced the need for work, for labor. It made people more productive as a species. And one of the constraining factors is labor, right? Labor is an element, it's a source of production, and there is a limited supply of labor, and there's an even more limited supply of skilled labor. That's why if you have a skill, you can earn more money than if you're unskilled. But with AI and then robotics, we could dramatically increase the supply of labor, both for routine tasks and for, tasks that require a degree of skill and thinking. And so this has the potential of unleashing a tremendous increase in productivity, which is going to benefit mankind. It's going to mean we have more stuff to consume, and it costs us less to produce it. But yeah, in the short run, there is a lot of risk that the government will screw all this up. There's, Schumpeter called it creative destruction.
yeah.
There's going to be people who are going to lose jobs as a result of the rollout of this technology. And depending on how politicians react to that, it could turn a positive into a negative. So,
Yeah.
because
Yeah.
what we don't want to do is just give these people who lost their jobs checks and keep them on the government dole for the rest of their lives, so that we just replace, their labor with inflation. And we don't want government trying to slow down the process because they say this is bad because it's causing people to lose their jobs. But
Yeah.
where you're going to see it the most is where you have high minimum wages for low skilled jobs. That's where you're going to see the greatest return on the investment. Places like California, for example, they now have a $20 minimum wage went into effect
Yeah.
this year if you work for fast food. Well, all those guys are going to be high on the let's replace them with a robot because the return on the investment is much greater because you're saving so much money. And it's not just the wages that you save, the $20 an hour, it's all the benefits that go along. Because if you pay somebody $20 an hour, it costs you a lot more than $20 an hour to hire them. When you pay workman's comp, Social Security, all those taxes. And then, of course, your workers could sue you for all sorts of things. And so you got to try to figure out, okay, I'm going to hire this person. They could sue me for sexual harassment, discrimination, wrongful termination, a hostile work environment. I mean, you name it. There's 8 ways from Sunday your employees can sue you. So there's a value to that. So when I eliminate an employee and replace them with robot, I eliminate that risk completely.
Yeah.
And I eliminate the payroll taxes, workman's comp. They can't call in sick. They don't take any vacations. So those jobs are going to go a lot, and it's going to be unfortunate because a lot of those people, they don't have any skills. So what are they going to do? Because and they don't have skills because, the government keeps them from acquiring skills. But,
Yeah.
If there was no minimum wage, the replacement cycle for humans to machines would take longer. Because if I can hire somebody for $5 an hour, it may be better to hire the person. Then, you have to look at where the break even is. At what point? Maybe it's $12, $15 an hour where it becomes cheaper to use the robot than to hire an actual person. That's why if you're in Asia, if you're seeing robots sweeping, you're in a very high wage economy where you can't get workers because
Oh,
otherwise, I mean, there's plenty of people around the world that can come in and do those jobs probably cheaper than the robots. But at some point, as we get mass production, the robots will be so cheap
yeah.
that nobody will have to sweep anything.
Yeah. Yeah. Well,
I mean,
I
look,
was gonna.
eventually no one's going to drive.
Yeah. Well, they're not even
The cars will
in
drive
some
themselves.
places. In
But,
some places, they're doing that already. The self-driving.
I mean, but that's a good thing because driving is a hassle. Driving is work.
Yeah.
And while you're driving, you can't do other things because you're watching the road. But if you could just get into a car and it drives you around, I mean, that's why wealthy people have chauffeurs, right? If driving was so great, the rich wouldn't have chauffeurs. They would just drive. But they hire somebody to do the driving because they can sit back in the back seat and relax, go to sleep, do some work.
Yeah.
Well, because of capitalism and automation, everybody is going to have a chauffeur, but because it's going to be cheap, because the
Yeah.
cars are going to come with a built-in chauffeur, and that way your kids need to go someplace. Nobody has to figure out who's going to take them. They just get in the car. The car takes them.
Yeah. Well, two things on that. Number one, I agree with you and I see your viewpoint on it. But now my concern is what is going to happen? You think how many driving jobs there are around the world? I mean, it's not just your
Oh
taxi,
yeah,
show,
the
it's
num the number one
lorry.
job for men in America, the number one job is truck driver.
Yeah.
And those are going to be the first ones that are eliminated because, there's all these rules too for the truck drivers, like how many hours can they
Yeah.
drive before they have
Rest.
to take a nap. And
Yeah.
I mean, if you have a self-driving truck, that truck is going 24 hours a day, 7 days a week, and it's not going to get into accidents. Your insurance costs are going to come down.
Yeah.
Um, So yeah, but now, okay, so what are the truck drivers going to do? Well, they're going to have to find something else to do. But society is better off because goods are going to move around the country for a lot less money. So everybody benefits from that. But yeah, there's always going to be a loser The minute your job is eliminated because of technology, okay, I got to find something else to do. But that's why we need a free market. We need the government to get the hell out of the way, because then you'll figure something out.
Do you believe that a lot of the people who maybe don't, let's say someone has been truck driving for 40, well, maybe 30 years, they maybe haven't got any other skills. I mean, these are the people I'm worried about because I just don't
Yeah,
know
I mean,
what is going to
and it
happen to
is
them.
it because if we don't have we're not living in a free market. But remember, people always want stuff. People always need stuff, and so people are going to be required to produce the goods and provide the services that people need. Now, if we come to a point where nobody needs a job, right? Because we have everything we want.
Yeah.
Well, then why would you want a job? You have whatever you want for free. But as long as stuff costs something, then there's going to be jobs. There's
Well,
going to
let's
be
model
people.
that. Let's model that a second. So let's say that this occurs, right? And there's no jobs, and you have, you know, automated trucks. You're going to have a monopoly probably in a lot of places. So everyone's going to have these automated trucks. The restaurants are going to be somewhat of a, maybe not restaurants, a bad example, but you're going to have businesses that become a monopoly. They're growing, their mergers, acquisitions, and then they're using all this tech. Yeah, you're always going to have tech engineers, software engineers, hardware
Yeah,
engineers. You're always
they
going to,
can be computers too.
well, yeah, okay, yeah, they could be. But then well, that leads me, I'm just going through the model here. What does that lead me to? You're going to have
It
this
leaves you with
super
leisure.
elite
It
wealth
just leisure.
of people. Well, yeah, maybe, but who's going to own the home that you live in, right? Who's going to own the
Well, I
car?
guess you still own it, but I mean, ultimately, right? If we come to a point where I could just push a button and a house just is constructed out of the atmosphere by little nanobots that just like
Yeah,
rearrange the molecules, and
right.
anybody can have a house just by pushing a button. Yeah, I don't need anybody to build it, and it's practically free. I mean, I don't know. I mean, you're talking, at way into the future. Of course, by then,
Yeah.
maybe we'll be building those houses on other planets. Who the hell knows? I don't
Yeah,
know how
right.
long it takes to progress to that level.
I think
Um,
we're moving rapidly towards this sort of stuff. And my point with it is, yeah, you and I own a home, people who are, older generation own a home, but I see these young people coming through and, I work with some of them from time to time, helping them out. And I just see this desperation where they don't have a clue what to do. They're told to go to university to do this program. I'm looking at the program going, what is this, program that you're doing? Some sort of the history of, whatever. And then there's no market for that in the real world. And they've been fooled into taking these programs. They walk away with all this debt. And then you've got AI just coming in and just wiping out a load of it. I mean, look at the legal profession, the accounting profession. These things are already getting hit hard, I'm seeing by
oh yeah, I'd love to
right.
see the entire legal profession eliminated by AI. It's like, and I mean, disputes or everything can be handled very quickly. If my lawyer was an AI and your lawyer was an AI and the judge was an I could sue you and win like, this
In a
within an
second.
hour.
Yeah.
It's like it's all over.
Yeah. It'd be
It's like
like,
we don't have, and there's no
yeah,
legal bill. It's
right.
just, so yeah, I know the AIs can pass the bar. They were doing that a year ago.
Yeah. Yeah.
Um,
But you get
But
my point. I
I
mean,
mean,
who would own the
America,
land?
that's the best benefit for America because we got more lawyers per capita than any place else in the world. So
Yeah.
eliminating lawyers would help the American economy more than any other economy.
Right. But you see my point about, let's say, the land and the things in your home. Um, who's going to own the? You're not going to own the land that will be owned by the government. I mean, you
Well,
could
I
do
hope
sort of
not. I hope the government
socialist,
doesn't
but
seize our land.
right. Well, I mean, honestly, Peter, the way things are going, I mean, is pretty wild. You've seen all these programs that I never thought I would see in my lifetime coming through now. And there is a lot of worrying things about how you're not really going to own very much, because in my mind, it's going to be certain big companies that might own a lot of the stuff. You're going to, you're going to pay that, but to hire this stuff. But is that going to be a UBI for the people that kind of get left behind? They haven't got the skills. That's a universal basic income.
Well, I mean, they don't really, I mean, they actually benefit the most from having goods and services that are more abundant and lower in price. So it's the poor that benefit from productivity more than the rich. I mean, the rich have enough money to afford things. It's the poor
Right.
that don't.
Right.
And so they need greater productivity to help help them afford things that they can't afford. So, it's all about a shortage of stuff. It's not a shortage of money. It's a shortage of goods.
Mm, mm.
And if we can produce more goods, that's how you eradicate poverty. People are poor because they don't have enough stuff, you know. But if you can produce greater quantities of stuff, that's the only way to really get rid of poverty. So
Mm.
AI and what we're doing has the potential of, creating a lot more stuff.
Right. Right. Should we move on to one of your favorite? I don't know if this is still your favorite topic, but it used to be one of your favorite topics a long time ago. Bitcoin and cryptocurrencies.
Well, yeah, you're asking me this now in the big mania of Bitcoin back above 67,000 today,
Right.
in the vicinity of its all-time record high,
Yeah. Well,
obscuring the fact that gold is also in the vicinity of a record high. It's above 2,100. In fact, it's the highest it's ever traded
mm,
while U.S. stock market was open for business. The gold ETF GLD is at an all-time record high. There's only been one day in history, I think it was in December of 2023, where gold traded higher than this, and it was at night. So the U.S. markets weren't open.
mm,
Obviously, we're going to take that high, but no one's paying attention to gold because they're all distracted by the sideshow in the Bitcoin mania.
yeah. Well, I was going to ask you about gold after Bitcoin, but we'll just wrap these two together now. Um, yeah, I mean, obviously, for that's due to the inflows. We've got these new ETFs. It's something like $10 billion that's inflowed in such a short space of time. But I think a lot of it's just FOMO. People FOMOing
Well, it's
into,
all FOMO.
yeah,
But the questions to ask is who sold their Bitcoin? Because somebody had to sell Bitcoin
right.
to a, it wasn't the miners that provided it. They don't mine enough Bitcoin. So uh, some smart people that had a lot of Bitcoin sold it, right? And then the question is, what's going to happen when all the people that bought those ETFs decide they want to cash out? You
Mm,
know, I mean, the market's going to implode because there's not enough real buying in the spot market to allow a liquidation. It's just not going to happen because it's only going up because it's going up. And the minute it starts going down, then people are going to want to get out. If you bought it based on the momentum, when it loses that momentum, it's time to get out, right? It's time to take profits if you have them, or cut your losses if you got in higher. But it's not going to be possible to get out because there's not going to be the buyers. Who's going to buy when all these new buyers sell? I mean, maybe some of the people who sold their Bitcoin on the way up will buy it back, but they ain't going to buy it back until the price is much lower,
mm.
if they even want it back. They may be like, I'm glad I got rid of mine.
So you haven't changed your views on Bitcoin in all these years then? Seems like, you got the same
No,
point of view.
nothing's changed about Bitcoin other than the price, and so I haven't changed my mind.
What about your son? Is he still all in?
Nah, well, he's more into AI now. He
Okay.
rarely talks about Bitcoin. He's moved on to other things that have caught his attention. He's still a college student, so
Right. Yeah. 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 Okay. Well, I think that's probably, I mean, why don't you just share quickly before we go on to gold? Why don't you just share what your concerns are with Bitcoin? I mean, we're seeing mass adoption. I mean, El Salvador,
no,
we're
we're
seeing,
not. We're I would disagree that we're seeing mass adoption. I mean, it's not being adopted as a currency. It's not
Mhm.
being used as a medium of exchange anywhere really. But yes, are there more ways to gamble? on Bitcoin? Yes. Is Wall Street now finding a way to get a piece of the action by uh, taking Bitcoin and putting it in an exchange traded fund and charging people a fee to hold Bitcoin that they could hold for free if they just bought it directly? Yeah. So
Yeah.
Wall Street has found a way to book the bets. So yeah, there are more casinos where you can gamble on the price of Bitcoin, but I don't consider that adoption just because more people are gambling on it. And I think the people are going to lose. I think that the price is going to ultimately collapse because there's nothing there. It's just air. There's no value in Bitcoin. If there's a price, I acknowledge there's a price. There can have a price on anything if people are dumb enough to pay it. But eventually, value. Right? Warren Buffett, another big Bitcoin critic, one of his lines is price is what you pay and value is what you get.
Mm.
And if you buy Bitcoin, it's going to cost you $67,000 today. That's the price, but the value is zero. It's always been zero. And eventually people are going to find that out the hard way. But in the meanwhile time, it's a big distraction. People are losing a lot of money or will lose a lot of money. They think they're making money. But people are not paying attention to what's actually happening in gold because gold is going up too, but for a very different reason than why Bitcoin is going up.
Yeah, I mean, in terms of what you were just talking about there, I've always held Bitcoin as part of a diversified portfolio. And if I look back over 7 or 8 years, it's probably performed the best out of, in fact, I would say silver only just outperformed it, but that's only because I did a really big trade a while back. You probably remember that. It was something like March of 2020 where it did 100% increase. But apart from that, I'd say probably Bitcoin has been one of my biggest gains. So I do hold it as part of a diversified portfolio. I know you disagree with that, but I just want to throw that in there for the viewers. But apart from that, gold has been a big holding for me, especially when I saw the inflation. One of the things I did was I moved to hold a lot of gold and the miners, moved to a lot of energy stocks, uranium, which actually did really well recently as well, if you look at the uranium. So in terms of just looking at diversified portfolios, then do you not see anywhere for Bitcoin in a diversified portfolio, even 5% for someone? You see it as zero.
Well, look, I mean, it's like, do I think you should have lottery tickets in a portfolio? I mean, you could. I mean, maybe they'll hit. I mean, Bitcoin has gone up recently. I mean,
Yeah.
I grant that, but okay, when do you get out? When do you sell? When do you realize that gain? Um, I don't think it's an investment.
Mm,
So if you said to me, "Hey, I take some of my money and I gamble on horses. I
right.
take some of it and I gamble on football. Uh, should I gamble some of my money on Bitcoin? All right, sure. That's another place you can gamble with it. But I don't look at it as part of an investment portfolio.
Mm,
It's part of your gambling money.
yeah.
That's kind of it. I'm not a big gambler.
Right. Right.
Um, so I'm investing. I just don't see. Yeah, I could have bought it and I could sell it now, but I mean, I could have sold it yesterday or the day before. So you know, I but I do think it's going to crash.
Mm,
Um, so I think all the people that are buying it. I mean, if you bought it last week at 50,000 and now it's at 67,000, and you're like, wow, look, I got this $17,000 gain. Well, I mean, maybe not. If you don't sell, and in a couple of weeks it's back at 30,000, you don't have that gain anymore. Now it's down, right? So
right.
it's all just a snapshot in time.
Yeah.
But most people I talk to who are into Bitcoin, when I say, "Well, when are you going to sell?" "Well, I'm never selling. I'm taking it to my grave." Well, okay, then
Right.
what? It's not worth anything then. What are you?
Yeah.
You're never going to sell it. You're never going to use it. You're not going to spend any of your wealth. So what good is having it? It's like,
Yeah, yeah, you're right, Peter. I mean, I've always, yeah, I do agree with you. I think people, if they're going to be doing this, they should be buying it when it's dirt cheap, and then when they see these massive peaks and they're happy to take those gains to exit. And reallocate
Well, I
that.
just don't know how you know when it's dirt cheap, when its value is zero. I think any price above zero is expensive, because you're overpaying for it. But
Yeah,
yeah, I mean, at least you could look at a trading chart or something and say,
right.
well, based on where it's been over the last few years, it's cheap, it's expensive. It's
Yeah.
clearly high now, right? It's where it is now is this kind of got back to where it was in 2021 at its
Mm,
peak before it went down, two-thirds. Everybody is now just convinced that, well, we're just going to blow through the old highs and we're going to 100,000.
right.
But people were just as convinced we were going to 100,000 in 2021. That's where those laser beam eyes came from. A lot of people forgot about that. But when Bitcoin was over 50,000, everybody put laser beams on their eyes because
Yeah.
they were focused on 100,000. And so the laser beams were supposed to be there until we hit 100,000.
Yeah.
And
Yeah. Yeah. And that created the new memes with the, the gold with the Peter Schiff, the gold in the eyes. And then someone did the lumber because the lumber prices were going. Yeah. Yeah. It's funny times. All right, let's talk about gold now then. Now, it's been doing pretty well lately, and actually, gold did very well for me when I needed to take some of my cash and put it into something for security. Did really well for me there, and I've been able to now move it back to what I need to do with it. Purchase some new things. I've got a lot of stuff happening investment wise. So it's done well for me. I'm advocate of gold anyway. I always have been. Do you want to talk a little bit on what you're seeing with gold at the moment? Where do you see it going? Maybe even talk about the miners if you want to.
Yeah, I think gold is very underpriced right now. I think it should be a lot higher, and it will
Yeah.
be. I think the reason it's underpriced is because most people don't perceive the reality of inflation and what's going to happen to fiat currencies, especially the dollar. There's too much confidence in the Fed and other central banks, and in financial assets. And so I don't think the public is buying nearly as much gold as they should, uh, especially institutions. They're probably even more underinvested than the general public. Talking about pensions, endowments, hedge funds, uh, they need to buy gold. The only ones that really seem to be buying now are the foreign central banks. And that really tells you something important, that these central banks are buying gold.
Mm,
I mentioned that GLD today hit a record high,
yeah.
but for the past 2 or 3 months, there's been steady outflows. I think it was 9 weeks in a row
Yeah.
of outflows. So investors were pulling money out even as we're hitting new highs. That's never happened. Normally, the new highs, entices new money to come in. See, normally the retail investor buys the highs and sells the lows. So it's after gold goes down that you usually see the retail investor giving up on it. They rarely sell at the highs because now they're greedy and they think it's going to keep going up. But now you have a situation where as gold keeps making new highs, the retail public keeps selling their gold.
Yeah.
Who's buying it? These
Yeah.
central banks. So they know what they're doing. Those bankers are a lot smarter than people who are selling their gold. And gold stocks, it was even worse. Gold stocks have been crushed. Last week, Newmont Mining hit a 5-year low. I mean, it got a downgrade basically to a sell. Um, so uh, the public, the sentiment has been very negative on gold, and even more so on the miners. And that's because of the false belief that people have regarding the future trajectory of inflation and the
Mm,
Fed's ability to constrain it and what these rate hikes mean. So I think gold is cheap. I think the gold stocks are even cheaper. I added considerably to my own position last week and even the weeks before. I was very happy to buy these stocks. I bought a lot more. For example, Newmont, when it hit a 52-week low, I bought more
yeah.
Barrick when it hit a 52-week low. I buy the stocks that people were selling because I knew that I was getting a great deal.
Yeah.
And the main reason I was able to get such a good price is so many other people were distracted by the Bitcoin ETFs. So, and some of the people were actually selling their gold stocks to buy these Bitcoin ETFs. The problem is going to be when they want to buy their gold stocks back, they're not going to have any money because they won't be able to get it out of the Bitcoin ETFs because they will crash. so, so that money's
Mm,
just going to go to money heaven. But People should be buying physical gold and silver. I've been telling people that gold's at the bottom. I didn't think there was much downside below 2000. In fact, we only got below it for a couple of days in the last few months. Didn't last, and now we're above 2100. We may never see sub 2000 gold again. So if that's the case, you're still pretty close to the floor at 2100. The ceiling is, the sky's the limit, because there's no limit to how much value gold, the dollar, can lose. The dollar has no floor, so gold in theory has no ceiling. So you should be buying it. And the miners, so for the physical gold, Schiff Gold is my gold company. People should go to schiffgold.com to buy gold and silver. Silver is probably the even better buy, given how low it is compared to its highs. It has to more than double to hit a high, and gold's already there. The mining stocks, super cheap. We have a gold fund, Euro Pacific Gold Fund. It's managed by Adrian Day. EPGIX is the no load version. You can buy it at Schwab, Fidelity, Ameritrade. All these discount brokers have my funds on their platform. Some full service brokers allow you to buy it, but pretty much all the discounted, do it yourself brokers have it on their platform.
Yeah.
You can also contact my representatives at Euro Pacific Asset Management. Europac.com is the website. We can get you into the fund. We can get you into a separately managed account where we manage your portfolio of gold stocks. And we also have other portfolios we manage for dividend paying stocks, value stocks, all sorts of investments that are designed to protect your purchasing power and grow your wealth in the face of a weakening dollar, higher inflation. Stagflation actually is what we're going to have. I think before potentially AI saves the day and we have an AI boom, we've got a old school bust coming, but it's going to be an inflationary bust.
All right, let's just on the gold again. I was surprised as well that it's taken this long to get a $2,000 support level, but it's taken a long time. Now, if we look at the foreign central banks, because this is one of the things that we didn't just cover, why do you think the foreign central banks are buying as much gold as they are? Do you think it's in preparation for either a dollar collapse or massive weakening? Do you think it's for something like a BRICS basket of currencies to be backed by gold? Like, do you have any theories on what's happening?
Well, I think, they're looking at the numbers. They're looking at the trajectory of U.S. deficit spending and the national debt. And they recognize that the dollar's days are numbered, that massive inflation is coming to monetize that debt. And also, you have the recent experience with Russia and the sanctions, which highlighted the danger of holding dollars as a reserve, because it places you in a very vulnerable position if the United States gets mad at you for whatever reason. And so I think a lot of countries want to try to mitigate that risk and are looking to get out of the dollar before they're sanctioned. And so if you're going to get out of the dollar, by definition, you have to get into something.
Yeah.
And so what is it going to be? Well, if I was a foreign central bank and I was unloading dollars, I wouldn't necessarily look at the euro as a great alternative. As bad as the dollar is, I mean, the euros, you could argue, is worse or maybe not quite as bad, but it's still not good, however you look at it. Same thing with the yen, all these currencies.
Yeah.
So gold is the obvious solution. And that's why, a lot of people that say, well, the dollar will never lose its reserve status because, it's the cleanest dirty shirt in the hamper. There's nothing to replace it with. Those people are always comparing the dollar to another fiat currency.
Yeah.
You don't have to compare it to gold, right? Gold is far cleaner than the dollar. It's nobody else's liability. Nobody can sanction you if your reserves are in gold, especially if you hold the reserves yourself, right, within your own country. And so gold is not somebody else's liability. Nobody can sanction you. It's a scarce supply. The supply grows very slowly over time. So it is the safest monetary asset that you can have. And in fact, a lot of people say, well, before the dollar was the reserve currency, it was the British pound. No, it was gold. Before the dollar, it was gold. when the pound was the reserve currency, it was still gold or silver, pound sterling, but gold. It was real money. We didn't have fiat reserves until after 1971. And that was supposed to be temporary, which obviously it was not. Um, so gold is what you return to. If the dollar loses its status, the euro or the yen or the pound or some other fiat currency isn't going to be anointed, with the crown of a reserve. We're just going to go back to the gold. That's where we were before the
Yeah.
dollar came on the scenes, and that's where we're going. In fact, the dollar never would have been the reserve currency if it wasn't backed by gold. In fact, it wasn't just backed by gold. You could get your gold whenever you wanted. It was redeemable in gold at a fixed amount.
Yeah, and if we even look at the history of how that occurred, it was predominantly, I would argue, World War II. The Yeah, everyone was all the outflows of gold from Europe and everywhere else were for payment for the US. The US ended up with huge, huge reserves of gold for a long period of time. The US had all the gold.
Yeah, well, and we got it because we made everything. We had all the factories. We made all the cars. You didn't
Yeah,
have cars. They weren't making cars in Japan or Germany. We made them all here. We
yeah,
made everything. We made all the washing machines, all the dryers, all the refrigerators, all the air conditioners. I mean, if you wanted it, it was made in America. And
yeah.
so we gave the world the goods that our factories produced, and they paid for it with their gold. That's because
Mm,
that's what we took as payment.
yeah,
And we
yeah.
became the richest nation in the history of the world, the biggest creditor nation ever. Of course, now we're the mirror image of that. We're the biggest debtor ever.
Yeah.
We
Yeah.
import everything that we no longer produce ourselves, but that's a whole nother program.
Well, I mean, we could, even if we went down the road of what that would look like when the dollar loses the reserve status, it just sort of, in an instant, the images went through my head of the US. I mean, you think of San Francisco now when you walk down the street and you see the camps and you see the craziness. I mean, that would be that would be almost every city if the US, if those dollars just became worthless overnight. You've got no, I mean, I don't think American people will be offended by me saying this because I'm not American. I don't live in the US, but the productivity and the factories and the things that you guys used to produce is just not there anymore.
That's I know. It's
Yeah.
not.
So it's not going to be good. I mean, you got great farming and you got other, ag sectors and stuff like that. If we can call it great with the
But it's not even
pesticides, the
that great farming.
GMO.
We still have a trade deficit
Mm,
in a lot of agricultural products.
yeah.
Look, I mean, we import 90% of our seafood, which,
Yeah.
you'd think would be shocking because we're surrounded by oceans and we have all these lakes. How come we can't be self-sufficient in fish,
Yeah. It's crazy, crazy. A question I wanted to ask you there. What do you see as the biggest risk right now in the global economy? Is it geopolitical? Is it financial? Is it war? I mean, what do you see as the biggest risk?
Well, war is a risk. I mean, and we have war now. The risk is that it spreads, and
Yeah.
you know that's a big risk too. Not only is it a financial risk, but it's human. I mean, people die in wars. People are already dying, and more people would die if the war is expanded. So yeah, that's a big risk. But yeah, we're a financial house of cards, so we could collapse at any minute. I mean, banks could fail. We could have runaway or hyperinflation. We're living on the cusp. I mean, people don't realize how close to the edge, we're skating.
Yeah.
And the fact that inevitably we're going off. It's not a question of if, it's just a question of when.
Yeah. That kind of incorporates three questions that I had. We can probably do it in one. I mean, how do you see this playing out? Because 3 years ago when we spoke, I remember you were, I think, more concerned than I've ever seen you. You said the dollar, we could see it at this record because the creation of the new currency was just unlike anything you'd ever seen. And you said you didn't know where this was going to end. I mean, you said
Well, I knew it was
keep
going to
going.
result in much higher inflation, and we've seen that. But yeah, we haven't had a complete dollar crisis yet or complete sovereign debt crisis yet, but that's coming.
Mm.
So all the things I was warning about 3 years ago, a lot of those problems have already come to pass. We've seen a lot of the consequences that I was foreseeing. We just haven't seen the end. And in the meantime, we've got new highs in the stock market. We got, so
Yeah, but there's so much liquidity around, Peter. I
yeah,
mean, you look at the liquidity,
that's
you
the
look at
problem.
the TGA, you look at everything going, the reverse repo. There's so much liquidity. And I mean, what's going to happen when the Fed starts lowering the rates that they're paying the banks? I mean,
Well,
this
look,
money's going to be released. Where's
that's
it
why, look,
going?
however this ends, it's going to end with the dollar much lower, I believe, against other fiat currencies, with gold higher against every fiat currency, with Bitcoin lower, a lot of the tech stocks lower.
Mm.
Emerging market assets are going to go up, I think. Real assets, productive assets. So that's what I own. I own the stuff that I think is going to end up being worth a lot less, which would be precious metals, commodities, stocks that operate in these areas, emerging market companies. Um, you know, that's where the value is. Businesses, basic businesses with products and services that people need and they'll continue to buy. Companies that have good earnings, pay good dividends. It's not the pie in the sky. Well, this thing has so much potential. It may make money, at some point in the distant future. Who knows? But I'm going to pay through the nose to get it right now because everybody else is buying it and it's going up. So those are not the type of stocks that are going to do well in
Yeah,
a stagflation, rising real interest rate, falling dollar environment.
yeah. Well,
And I
that was
say
my
rising real interest rates. It's hard to tell with nominal rates, but real
yeah.
rates will be, real rates will be falling, but nominal rates have to go up because of the inflation. I'm talking about long-term rates that the governments don't control. They can do
Mm,
what they want with short-term rates,
yeah.
but
Yeah. Well,
they're
that's my
not going to
last
have control over
question.
the long term.
That was actually my last question for you. It was, how do you see the most promising investments going forward? And I already had it, what you were going to say, pretty much down. So you pretty much covered um, what I thought you were going to cover there. So I thought you were going to say overseas emerging market businesses that pay
Yes.
good dividends.
Yeah.
Yeah,
Yeah. The emerging market stocks, I think Southeast Asia, other, countries, India, we'll see what happens in South America. Maybe Argentina will get interesting.
that is getting
But
interesting already.
I
Very
mean, Brazil,
interesting.
people have been buying Brazil, but I mean, Argentina has a lot of potential, but other countries could follow suit down there and start cutting back on government. Um,
Yeah.
but the Magnificent Seven stocks, although some of those stocks aren't as magnificent right now as they were, but I mean, they'll go the way of some of the dot-coms that went bankrupt, although they won't go bankrupt, but I mean, they're going to go out of vogue. I mean, like the Nifty 50, a lot of the Nifty 50 stocks are still around. Although some of them, I mean, Polaroid, Xerox, I forget, but some
Yeah.
of the stocks that were all the rage in the 60s, went away completely, and some of them are still here. But they don't have anywhere near the valuations that they had back then
Mm.
on a relative basis. So I think that the public is going to move on from these names. I mean, a lot of money will be lost. Eventually, they're going to discover the stocks that I already own and my clients own, and they'll be paying much higher prices to buy them.
Yeah. Great. Peter Schiff, thank you so much. It was always a pleasure having you on. Well, that is it for this interview. I hope you are subscribed to the channel if you want more interviews like this. And just a reminder, if you do want more financial content, that we do have a private community. It has a lot of financial videos in there and posts, also has my investment spreadsheet. And also a reminder about the two financial courses that I have, one on the stock market, how to actually invest effectively in the stock market, and the second on the psychology of wealth accumulation. Thank you so much for watching, and I'll see you next time.